Good afternoon, everyone. Thank you for joining us at this virtual event. My name is Frazier Martins, and I'm your host for today. Dun & Bradstreet is glad to host this power-packed panel discussion as a precursor to the BFSI and Fintech Summit 2022 on the pertinent topic, Reimagining Customer Experience, Need of the Hour for the BFSI Industry. The BFSI sector has always been a front-runner in adopting the most modern methods and technology for connecting with their customers. They must, however, focus on maintaining a balance between convenience, simplicity, and knowledge to ensure a smooth customer journey. Along the way, they have faced multiple challenges as the customers want them to create experiences tailored to their individual stories. In the BFSI segment, customer experience refers to a customer's collective experience interacting with various touchpoints, including online banking systems, emails, call centers, online advertising, face-to-face interactions, and even social media. Ladies and gentlemen, I'm sure you're all eagerly looking forward to listening to the views of our power-packed panel today. But before we begin, I request everyone to please take a moment and go through the guidelines that have been displayed on your screen. We certainly welcome questions for the panel, so please type your queries in the Ask Questions section. These will be taken up during the Q&A session after the completion of the panel discussion. A couple of tips though, we want to know you more, hence please mention your name and the name of your organization while posting your questions. You could also mention the name of the speaker you are directing your question to. As you can see at the bottom of your screens, there is an Ask Questions button. This will help you direct your questions to our distinguished speakers. Now let's take a quick look at the flow for today's session. Please refer to the agenda displayed on your screens right now. Clearly a promising agenda with an eminent lineup of speakers. I would like to take this opportunity to thank everyone for being part of this grand virtual event this afternoon. Let's kickstart the session then. I would like to invite Ms. Preetha Misra to open the session. Preetha holds a Master's in Science from Calcutta University and a PG DBM from Birla Institute of Liberal Arts and Management Sciences, Kolkata. Currently, she's a Senior Director at Dun & Bradstreet, India. Prior to joining DNB, she was the Managing Director and Chief Executive Officer of Business Asia Consulting Private Limited. She is the Founding Director and Member Secretary of the Association of Finance Professionals of India. She is also a member of the Regional CII Committees on MSME and ESG. Thank you for joining us this afternoon, Ms. Mishra, and over to you.
Thank you very much, Frazier. A very good afternoon to you, ladies and gentlemen. It's indeed my pleasure to be here. And on behalf of Dun & Bradstreet, I take this opportunity to welcome you all to today's session on Reimagining Customer Experience, Need of the Hour for the BFSI Industry. Today's event, in fact, is a precursor to the BFSI and Fintech Summit scheduled this Friday, 11th of March, with a theme around technovation. Looking back over the last couple of years, we all know how the situation has compelled businesses to think differently and to take the digital leap. Technological innovation no longer remains a luxury confined to a few. In fact, it has become a necessity for survival. In today's discussion, the focus will be on how the BFSI industry has leveraged technology to deliver an enriched customer experience, especially in an environment where the customer's perspectives and expectations have evolved rapidly due to the situation created by the onset of the pandemic. Not only are the customers more tech-savvy than what they were earlier, they also want omni-channel experiences and have a mobile-first and on-demand mindset, which directly influences their decisions. Having a positive experience or even a relevant interaction with a brand is essential. Creating a superior customer experience is key to attract and retain a customer. So how does one work towards creating better customer experience in such unprecedented times scarred by the pandemic. McKinsey, in one of its reports, mentioned that superior customer experience means having clarity and transparency, support for digital tools with which many customers are still unfamiliar, and new products and services for customers in distress. Another interesting point that this report brought out, and which is so true today, is that how companies can now turn doing the right thing into a competitive advantage. This will and is certainly becoming increasingly important in the current environment, particularly as doing the right thing will ultimately lead to long term value. Creating a superior experience can generate significant value. In fact, in another survey on the US retail banking customers that McKinsey did, it found that at the banks with the highest degree of reported customer satisfaction, deposits grew 84% faster than at the banks with the lowest satisfaction ratings. With a focus on creating a superior customer experience, the BFSI sector in India has become more adept at using AI to offer tailor-made propositions with better servicing and are working with partners for creating a composite and complete ecosystem to service their customers better. All these innovations are helping the financial institutions to offer more and more personalized solutions which are delivered through interfaces which are intuitive, seamless, and fast. With AI, natural language processing, these are helping customers deliver personalized services. There still remains a small segment of customers who are still to come to terms with the rapid digitization taking place, and companies need to help them to go digital. Thus, striking the right balance is key to managing customer experience. Another important tool for understanding customer behavior and in creating better experiences is the use of data and analytics. This will be key in creating the right personalized experiences as companies try harder to acquire and retain their customers. Reimagining customer experience is thus an apt topic for today's discussion. We have a fabulous lineup of panelists today, and I'm sure we will get many insights on strategies and tools to enrich customer experience in the new normal. Thank you again for joining us and have a good day.
Thank you, Ms. Mishra, for setting the right tone for today's event. The stage is set, ladies and gentlemen, and so without further ado, let's get this most awaited and power-packed panel discussion rolling. The discussion is around the topic, Reimagining Customer Experience, Need of the Hour for BFSI Industry. And we have a great lineup of speakers featuring in this panel discussion. Our viewers can certainly look forward to some great takeaways from today's proceedings. We begin by introducing the person who will help steer the conversation and help bring today's panel discussion to life. Ladies and gentlemen, today's session will be moderated by Mr. Vipul Oberoi, Director Marketing, Dun & Bradstreet, India. Vipul has a rich experience of 15 years in various business and marketing roles. Currently, in his role at Dun & Bradstreet, he is responsible for enhancing brand salience, ROI-focused go-to-market strategies to achieve business objectives of D&B and spearhead CSR initiatives. Ladies and gentlemen, please welcome Mr. Vipul Oberoi. Let me now introduce the eminent lineup of speakers joining us at the panel today. In no particular order then, let us begin by welcoming Ms. Sharati Ghosh, Senior Executive Vice President, Customer Experience Center and Virtual Relationship Management, Kotak Mahindra Bank Limited. Sharati heads the Omni-Channel Customer Experience Center and Virtual Relationship Management Platform for the mass affluent segment at Kotak Mahindra Bank. She is responsible for customer service provided by the bank across channels such as phone banking, email, and social media. Additionally, she also drives customer outreach and manages cross-sell campaigns through the bank's outbound contact center. Thank you for joining us, Ms. Sharati Ghosh. Ladies and gentlemen, a round of applause for her, please. Our next panelist is Mr. K.V. Deepu, President, Head Operations and Customer Service India, Bajaj Allianz General Insurance. Mr. KV Deepu drives digital transformation and innovation as the head of operations and customer service at Bajaj Allianz GIC. He leverages startups from Fintech, InsurTech globally while leading a team of 1,600 people in 150 locations. A management graduate from IIM Lucknow, he joined Bajaj Allianz GIC in 2016 after a stellar career of nearly 20 years with GE Capital. His forte has been combining digital transformation with deep domain expertise and Six Sigma rigor to redesign the business model for operational excellence and customer delight. Ladies and gentlemen, please put your hands together for Mr. KV Deepu. Welcome, sir.
Thank you, Frazier.
Our next panelist is Mr. Prithvijeet Mukherjee, Head of Customer Service, Nippon India Mutual Fund. Prithvijeet brings with him over 24 years of rich experience in customer services across BFSI, telecom, BPO, and the hospitality industry. He has been with Nippon Life India Asset Management Limited for close to 9 years, heading customer service. He was earlier with Bharti Airtel, managing contact experience across lines of business. Effectively managing right cost to serve, leveraging technology, and transforming contact centers to profit centers are his areas of expertise. Prior to joining Nippon India, Prithvijeet managed various key positions in Bharti Airtel Limited, ICICI Bank Limited, Reliance Infostreams Private Limited, and the Taj Group of Hotels. Ladies and gentlemen, let's welcome Mr. Prithvijeet Mukherjee. Thank you for joining us today, Mr. Mukherjee.
Great to be here, Fraser. Thanks.
We also have with us Mr. Mohit Goel, co-founder Checkbook. With more than 2 decades of experience in sales and marketing, Mohit has worked across industries including insurance, mutual funds, and telecom. He has been associated with some renowned brands in the past, including Hutch, Vodafone, ICICI Prudential Mutual Fund, Tata AIG General, and ING Vysya. Ladies and gentlemen, let's put our hands together for Mr. Mohit Goel. Thank you for joining us, Mr. Goel.
Thank you, Fraser. Pleasure to be here.
Lovely. And now, last but not the least, our final guest is Mr. Satish Nair, Head of Treasury and Corporate Affairs, Vastu Housing Finance Corporation Limited. Satish Nair is the Head of Treasury and Corporate Affairs at Vastu Housing Finance Corporation Limited. He manages the treasury function at Vastu and is responsible to expand the liability base, arrange and execute roadshows, manage and maintain communication with the investors, regulators, banks, rating agencies, and DFIs, and represent the company with the regulators. He also manages compliance, communications, and brand outreach for the company. Ladies and gentlemen, let's put our hands together for Mr. Nair. I welcome you all once again and request all of you to please come on video if you haven't yet. Yes, and with that, we begin this eagerly awaited panel discussion. I invite Mr. Vipul Oberoi to take over. Have a good one, sir.
Thank you, Fraser. Good afternoon, everyone, on this lovely Wednesday afternoon. Wednesday afternoons means it's almost maybe perhaps nearly the weekend, but certainly any day is a good day to have a discussion on what makes our customers happy. In fact, Friday will be another great day because Dun & Bradstreet India is organizing its annual BFSI and Fintech Summit. That's on 11th of March, and the theme is Technovation, the way forward. The summit will also feature eminent speakers from around the world who would be discussing technology and innovation in these sectors. And customer experience domain is no different. It's an important success factor in BFSI, and no discussion on technovation will be complete without a discussion on customer experience. Whether it be banking, insurance, lending, investments, or payments, each and every Indian has utilized these services multiple times in his or her lifetime. In addition to this, since it's all about managing money and the future, customers are also extremely sensitive about the experience they get from the service provider. While BFSI sector has always been a front runner in adopting modern technology methods, they are also having a hard time maintaining a balance between convenience, simplicity, and knowledge, and providing at the same time the best kind of experience or a smooth customer journey. personalization, self-service, tech versus touch, banking as a service, embedded finance. There are so many new concepts and developments that marketeers and CX managers have to grapple with these days. So there is a need to relook and kind of reimagine how or what customer experience should be. And today, it is hard to reimagine anything without bringing in the benefits of technology. That is why Dun& Bradstreet India has brought together experts in the domain of customer experience. This panel has a combined experience of more than 120 years across 25 different organizations. So you can only imagine and be delighted in anticipation of the learnings that lie ahead. Thank you, panelists, for coming over for this discussion. We would first start with some basics of what customer experience is. Of course, customer experience refers to the collective experience with various touch points. But I would pose the first question to Prithvijeet on what do you think is customer experience? What are the critical parameters that your industry uses to measure the CX across the value chain?
Thanks, Vipul. To start with, at the outset, let me just, without breaking any hearts here, let me just, share with you that customer first as an approach, as an attitude for any organization actually is not functional attribute. It is not decided or led by any particular function, certainly not the CXO. It is purely and across universally driven by the CEO. If your CEO has that customer first approach, then the rest of the organization, functions that are not even related to service, they also kind of adopt that way of doing business. And so if one is able to get that kind of an alignment from the CEO, then that kind of makes the overall journey for the customer that we take on behalf of customers much more meaningful and beneficial on both sides. If you were to do a regression analysis and look at what are the top drivers that determine the customer's delight or the lack of it towards any service provider, you would end up getting a Pareto invariably, irrespective of which industry you are in. About 20 to 30% of the processes would determine almost 80 to 90% of the service level, the satisfaction level that a customer derives from their service provider. Now, what to measure is the easy part. You actually do the entire life cycle of the customer. You start from pre-onboarding, then you go towards onboarding, the entire transaction, interaction, feedback. You look at communication and product efficacy. So along all of these, categories of your organization or processes of your organization, you need to measure them. There are some quantitative metrics and there are some qualitative metrics. Some of the quantitative metrics which are imperative for any service-facing organization are your CPC, which is your calls per customer, your complaints per customer, the number of queries and complaints that you generate when you come for a transaction. So what are the bottlenecks that you face that results in these queries and complaints. To give you an example, if you are an investment-driven company, for example, if you're a mutual fund, the returns that you get on your product that you've invested would cater to most of your satisfaction levels. So if you manage to provide the customer with the returns that he expects, then a lot of your other parameters, you often get the benefit of that. On the other hand, if you are not able to deliver on that promise, then the opposite of that is true. So you are rated poorly, even if you think in your own eyes that you're doing a fair job in terms of delivering other processes and services. On the quantitative side, you look at these things. Then CSAT obviously is one of the most important measures for gauging how good you are from a customer's eyes point of view. There again, you cover all the processes. The key here is how to measure, and what is the frequency of that measurement. Typically, what most organizations do is they have a CTA model, which is your customer's transaction assessments. At the end of every interaction, at the end of every transaction, there's a real-time feedback that you capture. If you do it delayed, if you do a post-event kind of a thing, the efficacy of that response kind of gets diluted. So the trick is to do it real time in multiple ways. So, for example, if you're interacting in a call center, then post call, the IVR can transfer the call. You can transfer the call to the IVR and just ask 2 or 3 questions. If you exceed 1, 2, 3 questions, then the number of responses come down. Typically, we see the response rate being in the range of 1 to 3%. In some cases, like the IVR model, it goes up to about 5-6%. So it is statistically 3% is a good number to measure any customer feedback for any of the channels that you're measuring it for. On the digital assets, it makes absolute sense to do it immediately on the screen itself after a transaction. And if it's a binary kind of a question, whether you're satisfied or not, then it yields more responses. The key, of course, here is that if somebody is rating you poorly, you obviously must close loop and fix the issue, because that will build trust on the organization. In the end, to sum this part up, there is something called the Marketing Loyalty Index. Mm-hmm. Now, as per that, an unhappy customer, if you've managed to recover well and fix the issue that he had faced, is 76% more loyal to the company than a customer who has faced no issue. So organizations need not worry about complaints, need not worry about dissatisfied customers. They should, in fact, worry about customer indifference. So that is something that we should all be mindful of, that a customer should not stop caring for you.
Yeah, I think that's a very good point you mentioned about customer being indifferent. In NPS also, we talk about the passives. And while these fence sitters you might feel it's okay to have them, but these are the ones who are more likely to fall in the more negative bucket. And in fact, I like that you have brought out those metrics right from a per customer metrics like complaints per call per customer to moving to a more immediate feedback of CSAT, and then moving to MLI as an index. And that's actually good. One has to have a complete view of the spectrum. And this also brings me to the fact that these are more from the customer side. Deepu, I would also like to ask you about what you think of CX improvement parameters on the business side, especially the operations. And you are a Six Sigma black belt. So what do you think the parameters should be?
Yeah. No, thank you, Vipul. I think we covered a wide range, in the previous discussion. So to give you a very pointed, answer to your query, in terms of, what you see, let's say on the business side or the operations side, I think one is, since you spoke about Lean Six Sigma, you go back to the classic paradigm that ultimately what you manage is what you measure. So it starts with measurement, and which is where, and you also touched upon NPS. So I think one of the key aspects is to look at NPS at every touch point. And, and it has to be real time. I think the point is, you can only do so much, from a post-facto analysis, wherein you have to salvage the customer's experience. But if you can do it real time, so therefore, real time NPS in terms of not just measuring, but if you can take corrective action on the spot, so I think that's clearly one. Now, in terms of, the downstream metrics or the upstream metrics, depending on where they lie in the customer life cycle, one, of course, is the process metric, right? Every metric has every process has a metric, right? Whether it's turnaround time, whether it's accuracy, right? Standard metrics, which come in. I think the other aspect, which was touched upon is how do you also ensure, because the measurement cannot be only about the process, the measurement also has to be about the person behind the process, right? Because you're dealing with a customer, who's a live human being, right? So therefore, the emotional quotient which comes in, and for example, if you look at our brand, our entire motto is caringly yours. So how do we ensure, that we measure, the extent of care that we give to customers? One, of course, it comes through, in the NPS, that we do at every touch point. The other is, we also reach out to customers and take their feedback on the qualitative aspects. And that's how, we're able to measure not just the hard metrics, but even the soft metrics. So if you summarize it, it's about touch points at every process, which gives you a micro view. You go and, measure the emotional quotient, by speaking to customers. And that's when, by closed looping, you're able to take a macro view and then ensure that whether it's a business metric, which have standard metrics like loyalty, retention ratios, repeat business, or the operational metrics, like I mentioned, whether it's process or turnaround time, you get into a journey of continuous improvement.
That's excellent. In fact, Deepu, I think you, like Prithvijeet, have also stressed on the fact that measurement, of course, is important. And as you rightly said, what you manage is what you measure. But I think both of you have stressed a lot on real-time measurement. And I think the technology is the one which can enable real-time measurement. So Satish, I would like to ask you here, and you are into housing finance, your company is into housing finance. How has technology helped to enhance customer experience? And have you seen any benefit as far as ROI is concerned?
Well, Vipul, thanks for asking this very pertinent question. And I would actually like to take back 6 years back when Vastu was actually founded. 2014-15 is when we toyed with this idea of getting into the mortgage space, having spent tons of years in the retail banking industry. One of the biggest pain point, and especially the segment we operate in, and I guess this is one segment which you will appreciate, it is not very highly sophisticated at that point of time. Again, I'm going back in time. I'm talking about the semi-urban and the rural India where we typically operate in. In fact, 78% of our borrowers are in the self-employed segment where they are typically an MSME owner or doing some kind of businesses. So there the challenge was that, whenever the problem statement, if I have to just talk about, and which was the biggest detriment to, I would not say customer experience, but customer delight when it goes to taking a loan, was the amount of printouts they had to carry for doing a loan application. And you can just imagine, way back that, right from ITR documents to KYC documents to income assessment, etc., and building that whole file and going there. And we felt that this is the biggest opportunity where can we just make it a zero? And what we did is that we built a system which was purely designed to bring this customer delight and ensure a completely paperless model in terms of getting a loan appraised. And we were very successful because initially when we started, getting customers, they were zapped. They were asking our, sales guy that, are you sure that you're not collecting any documents from us? We said, no problem. We're collecting everything digitally. We don't want anything, no printouts, no Xerox copies, nothing of that sort. And what it actually transformed is that the process or the journey for a customer to take a mortgage loan and realize that dream of home, which was taking around 3 to 4 weeks, at times also say a couple of months in a public sector bank, just got cut down to 3 to 4 days. So this was a delight which we in fact was very fortunate to give to our customers at that point of time. And of course, what it enabled is to price the loan effectively to a customer, because it envisioned that we are cutting down a lot of channels in between. We are not carrying a lot of overheads in terms of managing these files from one location to another.
The verification process,
Yeah. Correct. So everything, in fact, getting those documents from A to B. For example, we don't move files from say Jaipur to Delhi or Bangalore to Bombay. Everything is decentralized because the system is centralized. So my credit officer who is sitting in Jaipur can actually access a file which is got generated from Coimbatore. So that improved a TAT and overall per se, and ultimately resulting in an excellent customer delight. So I guess that is where the transformation we have seen. In fact, last couple of years has also been really exciting because one of the things COVID actually enabled or I would disrupted was the customer touch point in our segment, because ours is a more like a touch and feel, when it comes to loan servicing as well. But we were very fortunate to use technology to reach out to our customers and borrowers and understand the impact digitally in terms of what was their business. Because on the back, we are running, multiple scorecards and matrices to understand from each segment what is the impact, and we can actually measure and then pinpoint that, okay, fine, this is the segment or this is the pin code where we are seeing some issues like delinquencies or stress in their segment, and work with the customers to figure out. So to answer your question short, yes, I guess one of the biggest differentiator in giving the customer delight in our case has been technology.
Yes, in fact, and you mentioned about the impact of the pandemic, the lockdown itself, and how, in fact, I think the more technology mature organizations have been able to bear the impact of lockdown much better and have been able to provide their services with no disruption. And I think fintechs have had a big role to play in this sector, especially during the lockdown. In fact, banks are trying to become fintechs, and fintechs are trying to become banks. But no one can deny that fintechs has created a revolution, and Mohit is part of that revolution with his company Checkbook. And Mohit, what's your thought on providing a better CX for the BFSI sector? Mohit, you are on mute.
Yeah, sorry, I had kept myself on mute. Sorry. Yeah, so I think thanks, Vipul, and I think it's one of the topics I've particularly been passionate about customer experience all my life. I've been trained to deal with customers first. So glad that you get a chance to speak. I just want to draw some fundamental points, and then we'll elaborate as the time permits. See, every department, so I have worked in multiple organizations. I've worked in BFSI, large organizations. We've seen customer experience, customer services as a department in an organization, a traditional financial services company. Whereas a fintech actually is all about customer experience, because that's the only way we can make a difference. And we use product solutioning and technology to make sure that that experience is delivered. So we are indoctrined. We are actually injecting each and every person who joins our startup, or for that matter, any fintech, that it is all about customers, and you have to think about their experience, and don't think that a customer care department or customer services department is going to take care of it. It's your job as an important stakeholder, right? So I think that's where the fundamental difference lies. There are 2-3 broad points I want to make. One is that the tradition in financial services versus fintech, right? And we've seen this, that traditionally financial services companies, big banks, insurance companies, lending companies, they've been very heavily reliant on distribution, right? They've been high fixed cost businesses. They've been relying on branch networks. They want the customer to visit the branch, whereas fintechs have found that white space. And there are so many examples that you can think, and we are one of the examples. I'll talk about Checkbook in a bit, where we are actually taking the service to the doorstep of the customer, whether he is sitting at his home, working in his office, or running a shop, right? So I think that's the tradition versus fintech reality, and that's the breakthrough, right? And given that you also mentioned about pandemic last 2 years, so there's this mini renaissance of digitalization which has happened, right, where everyone is working together to be able to reach the product and service at the footsteps. So I think that adds a lot to customer experience, because the customer feels less anxious, because in a very simple way, you're able to provide the service that he's looking at his doorstep, at his convenience of a mobile or a desktop, right? And largely mobile first convenience in BFSI work better, right? So I think that's one point. The second point is about segmentation, which again, traditionally financial services has looked at customers as one size fit all solution, that I'll create a product and everyone will buy. But where fintechs fundamentally make a difference is that they don't believe in one segment or one size fit all. They actually believe in something I call as segment of one, right? Because there is so much of data available. I'll give you an example. I got access to credit scores, credit history of the customer. I got access to alternate data basis the other type of transactions the customers are making, and I can pool all of this and give the customer a personalized service and a solution which is relevant to him, not relevant to 10 other people. So that, I think, elevates the level of customer experience. So that's one broad concept or focus area that every fintech is following. We've got access to DigiLocker, right? DigiLocker also gives you access to various types of information. So you can just pull that in and create segmented products. Checkbook, at Checkbook, we are actually positioning ourselves as a neobank for small businesses. There are a lot of companies who take care of top of the pyramid, which is comprising of high net worth individuals and enterprises. And then there is government who's taking care of bottom of the pyramid through state grants, etc. And we are actually taking care of the missing middle, is what I call, which are small business owners, right? People who have shops, who are running pharmacies, who are running kiranas, who are traders, typically a 40 lakh, 50 lakh sales turnover kind of outlet. So we are actually catering to this community. We are solving for this community through three solutions: banking, lending, and insurance, right? And there is lack of penetration in all the segments in this community, right? So that's what we are solving for. So using this segment of one and using alternate data, we've been able to actually improve credit access to this population, so which essentially is a delight in itself, adding to the customer experience. So that's the another piece. I think the third part, which is possibly relevant for all types of products and services across the spectrum, I think speed and ease with which you are able to give access, right? So I spoke about going to bank branch, whereas now fintechs are bringing the same banking branch to your doorstep. But it's also the speed and ease with which you are able to provide the experience. We at Checkbook call it as automagical experience, right? So it's the right, it starts, at the time you download our app, how the UI and the UX works together along with our core tech and onboards the customer instantly. And the customer does not have to be anxious filling 10 field forms. So we auto pull through multiple sources and onboard the customer. And we also give him eligibility of what are the products that he or she can actually access. So I think these are three broad points which differentiate fintechs from the rest. Of course, the entire ecosystem is working together. Everyone has to work together to be able to improve the penetration of financial services. But yeah, I think broadly these 3 points. One is fintech versus tradition. So that's there's that white space that we're trying to address. Second is segmentation of one. And third is speed and ease, delivering an automagical experience.
But with all these three, can all of these three work together? Do the laws of physics apply here? Because you talked about hyper personalization, you talked about segment of one, but does that in any way compromise on speed and efficiency, or perhaps even your UI UX? Is it able to cater to all segments? Because then you have millions of segments having different expectations.
See, I think the answer here is very simple, Vipul. You can actually be a very diversified organization catering, meaning everything to everyone, right? So there are so many examples around us. I would shy from taking examples, names, etc. But the fact that I'm catering to one segment in this entire ecosystem, like I described, a small business owner who's a proprietor, who has a sales turnover of 40, 50 lakhs, actually simplifies, because I'm then catering to this community, and within this community, I'm creating micro segments, and I'm able to deliver with ease and speed. And as I said, one of the important things is to deliver this automagical experience, which cannot be delivered if you don't have ease and if you don't have speed.
That's interesting, because typically it has been said that technology and scale have made financial services very process driven and very commoditized. And you have a contrarian view to that. You feel that it's in fact helping to give more personalized services. So I would also then pose this question to the more traditional BFSI company, Sharati from Kotak Mahindra Bank. You have been with banking for so long, with Kotak Mahindra Bank for so long. Have you seen financial services becoming a commodity? What are BFSI companies or your bank doing to enrich customer experience?
So Vipul, I clearly see BFSI and my bank, all banks, moving towards establishing consistency. Through the products that we offer. We have many products. I see simplification and I see a drive for consistency. In the last 2 to 3 years, I have seen an added focus not just by CX SQ teams, but also product teams, to fixing the customer journeys, to providing a contextual experience. A customer who at various points in time is opting for the loan, the whole point being that that whole context is important of when the customer is coming for it. Second, I see a huge change in how we look at our employees and driving, empowering, experience-based culture within employees, getting measures in place. I think everybody's spoken about measures and then driving them for improvement. I heard how Deepu spoke about NPS, close looping. Because, close looping is just not enough that I call Mr. Oberoi and apologize. I also need inciting that what could I have done better at that moment of truth so that next time that doesn't happen. And all of this is happening to take basically CX to a new level. These three things that I spoke about. If you look at banking, you mentioned payments, you mentioned convenience. So let me take that term up. In banking transaction, velocity. That is what a customer feels a bank for every time. I go to buy something as small as a textbook for my daughter, I am using digital payment, and for everything else. Now, payments is a deeply emotional one, we've realized. Not many customers take many loans in their lifetime, but payments is something you are using every moment. So the two pillars, one you said was convenience, but the other pillar equally as important is safety. Now, for a customer, no one really wakes up in the morning desperate to make a payment. They are waking up in the morning wanting to buy the next gadget, wanting to refill the fridge with groceries, or wanting to buy a book. Now, the ideal payment process for these three various use cases of customers is that it has to be invisible. It needs to happen without any obvious interaction. Oh, now I am doing payment. No, it has to be invisible. Plus, it has to give peace of mind to the customer. And that is one of the things that I said, I see the whole industry driving towards that.
That's, in fact, interesting points there, Sharati. Sorry, we have lost you on the video.
Yeah.
So, in fact, you said the right thing. Is it a commodity? Perhaps no. What we are trying to achieve is consistency, and I really like that word. Consistency is also perhaps what a brand is. A brand is a promise that you will get a certain consistent service each time, every time. And but do you feel when you spoke about velocity, you had in mind the quick commerce, which is in vogue these days, since a customer gets groceries in 10 minutes. Is there expectation to get those banking service also very quickly?
Absolutely. A recent customer I spoke to, he was a detractor, and we called him because the debit card had actually reached the customer in the TAT, which was 2 days that we had promised. Yet the customer was very, very unhappy, and he was a super detractor. So actually, when we outcalled the customer, he said, you know what? Amazon for $100 product is sending me 3 updates. Delivery boy has left my, Bhivandi facility. Yet Kotak sent me one saying your DC is on your way. And then I received it. Where are the 3 updates?
Yeah.
So yes, there is constant, and I think disruption is everywhere. And yes, our customers are comparing us to every other service provider. And that's why I think we are also realizing and changing our journeys to cater to that requirement.
You've been with banking when the branch banking was in vogue. Same with me. And I've seen how, someone rightly said, in fact, I think it was Mohit who talked about the traditional BFSI companies relying a lot on the distribution channel that the customer comes to them. And now here the case is when we have to go to the customer, and customer is more demanding as well. So it's something, there's a new term called smart servicing, which is currently in currency. And Deepu, in your experience, have you seen this in your sector as well? Have you seen any comparable global benchmarks for smart servicing?
Yes, Vipul. In fact, if you look at the insurance industry, globally as well, IoT, which makes the entire servicing smart, has been a significant factor. One, it expands the scope of universe, because when you make assets smart, then they come into play and you're able to get a lot more data, because the customer footprint becomes digital, and when you get that real-time data, you're also able to service customers real time, to the point that all of us made previously. And let me just share a couple of examples. One where we use the framework, and one where we use the framework to go beyond. So, for example, if you look at telematics, right, it's essentially where you use IoT to place a device in the car, and then you're able to give customer feedback on his driving behavior. So one, you can work on that, and then that can become a tool for conversation between the customer and the insurer when it is time for renewal. So that's how you can have a more informed conversation. So what we did in the Indian context is, because in India we also take cognizance of the fact that a lot of customers also use drivers, right? We're placing this device in the car. It's not necessarily feedback on the customer; it's also on the driver. And then we said, how can we add value? So, for example, let's take a working couple. Let's say there's a driver who drops the husband and wife to work in the morning, and then let's say he also drops the kids to school. And then he let's say picks up kids in the afternoon. Then either drops them to home, or let's say he drops them to a daycare facility. And children being children, and given all that we hear, right, we're obviously worried about their safety. So we deployed a feature called Geofencing, which is only possible because now that we have an IoT device in the car, we can offer a smart service. So what happens in geofencing is you can mark your traditional routes. These are the routes which the driver can take from the school back to the daycare facility, or let's say in case he drops the kids home. And should he take a different route, they get an alert. Now, this kind of smart servicing is not possible, had you not launched this. So that's also on the one hand, it helps you to offer new features to customers. On the other hand, to the point that I made, at every level, when you have sensors at home for home insurance, or you have a sensor in the car for car insurance, or if you have a sensor in property for property insurance, across the entire spectrum, you can make your entire servicing and your products smart.
So technology giving you a real-time feedback again. In this case,
absolutely, new products, real-time feedback, and real-time solutions. So, for example, you have a sensor at home. Immediately, you can put the fire out. The point that Sharathi and I made. It's not only about real-time feedback and measurement, but real-time solution. Sometimes it's perishable. You have to give it on the spot.
So there are solutions which are on the what we can call the digital world, and there are solutions which are there which have to be brought in the physical side of it. So Prithvijeet, do you feel BFSI companies, how could they really decide on an optimum asset mix, where to go physical, where to go digital, from a customer experience perspective?
So Vipul, sometimes we actually lose sight of what mobile has done to this country. It has actually democratized information, and we see a tremendous convergence between Bharat and India, which was unthinkable, let's say 10 years back. So so the adoption of technology is no longer an elitist thing. So the demographic barrier has now been shattered. You have people from all walks of life, from all pin codes across the country, which are using smartphones. So the short answer to your question is that it will coexist. Obviously, your physical and digital will coexist, but a large section of your customer base, irrespective of their location, are now organically moving to digital. At least for most of their servicing needs. There will be a section of customers who are not comfortable on digital platforms, so they will, take the effort of going to the branch. So obviously there has to be a level of coexistence between the two. What we used to do earlier, companies were earlier guilty of pushing digital to customers because their motivation for doing that was mostly cost considerations. Servicing, if you are a telecom company, you have 200 million customers, right? Your contact center cost is 700 crores, right? So it would make sense for you to forcibly shift a lot of your customer interactions to non-voice channels. BFSI, also large organizations which have millions of customers, and their need to call is slightly more than, let's say, a mutual fund company, where the customers need to call you is fairly less, let's say, compared to a bank, right? So the key is not to create digital assets with the sole purpose of enforcing it down to the customer's throat, because it'll never work. It'll never succeed. For anything digital to succeed, it has to be pull. It has to be a pull factor. Otherwise, it will not. So what we have seen in the last few years, that a lot of companies they have taken the care to look at VOC. What is the customer saying? What is their experience when they are creating a product? So, I mean, you need not always create something and then just go to market. You can actually collaborate with some of your stakeholders, which can also include customers, and then create something. To give you some examples of, our company, 5-6 years back, the total number of purchases that we generated from digital assets was 5% of the overall sales, right? The number of purchases.
That
Today
was,
we are
it will be,
generating,
sorry, this
that
will
was
be
5-6 years back. Mutual fund, yeah. Today we are at 55%. So 55% of our transactions are coming from digital assets. If I talk about service, 5 years back, we have a metric called human to virtual, which is if there are 100 customers who want to reach you for any of his query, request, and complaint, how many require a human interaction, be it at a branch, be it at the call center? Now, that is the human side of it. And how many are servicing their needs on the virtual platforms, be it the IVR, be it your digital assets, be it your pull-based SMS services, push-based SMS services, right? So earlier, this ratio used to be 30-70. 30% of everything used to be on the virtual channels, and 70% used to be human intensive. So there would be an agent involved, or there would be a branch executive involved. Today, the ratio has reversed. Today, 70% is doing all his servicing on the virtual platforms, right, without any human interface. Now, apart from tremendous cost efficiencies, it is also empowering the customers because you have created capabilities on the digital side that are pull driven and not push driven. So customers organically take to these options that are there and they kind of service their needs. The other important thing that I must stress here is at times people confuse between digital companies and digitized organizations. Let us remember the Amazon, the Swiggy, the Paytm, they are all digital companies by their model itself, And in some of these companies, the width of QRG, which is the interactions that are possible, are very finite. I mean, for Swiggy or Uber, how many different queries and requests and complaints can you have? It can all be summed up in about 20 odd interactions, right? But in a BFSI kind of a industry, we are talking about queries and requests that can go up to 500.
Yes.
So there has to be an element of both physical as well as AI. For example, AI works beautifully, NLP, AI, they work beautifully when the query is binary in nature, right? When it's not subjective to deal with. But the moment it is subjective, the A component of AI is 90%, and the intelligence factor is 10%. So we must kind of provide AI-based solutions which are also agent assisted when the time comes. So if you have these kind of hybrid models, then automatically you would see an uptake of digital, what we have seen in the last few years.
So I think the wisdom which you are sharing here is that you sliced and diced your process and see what could be digitized, yet not falling into the trap to digitize everything, because everybody has a preference of whether they want to go physical or digital.
Correct.
So it's like to each his own, and they would prefer organically which channel they prefer. But a company should have both channels, providing high level of customer experience. And there's always a thought that some people or some product categories are very conducive to a personal interaction. For example, housing finance in Satish's case. So that's considered to be a very high involvement product. So it is assumed that people would want a physical interaction come what may. So, Satish, on the same topic, what are your thoughts? Am I correct in saying that being a high involvement product, people always prefer going physical?
Not really in our case, at least. I could, kind of, differ on that. But yes, as Deepu mentioned, it is a segment which requires, because BFSI as a category has different, I would say facets in terms of customer experience altogether. Now, the query can come from as simple as that I didn't get my, home loan statement, to as, severe that I got debited twice. EMI, it will be something else, altogether. But these are some queries which the customers do get it. Problem, or I would say the problem statement in a BFSI segment is that because since monies are involved, customer would want that touch point at some given point of stage. You might have a first level or second level of interaction either through the digital means, either through, reaching out to your customer care numbers or through, other platforms. For example, one of the things which we have seen is almost 200% increment in using our Vastu Connect app by customers in the last 2 years. Why? Because our branches were closed and they were encouraged to use the Connect app for resolving any queries. And that was something which was very encouraging. And people do actually, if we did an analysis in terms of what kind of categories of customer queries we have, of which around 75% was related to account related queries. So everything was made as a self-service on the app, and today the customer is very happy to actually at least try that first. But yes, there are customers who would still want to come to the branch and would come and sit and say that I want this or I want a statement and all. So it is not completely, I would say, incongruent in terms of whether you can completely evade a physical touch. Not possible. Country like ours, especially in a segment where we are in affordable housing, where people, adopting to technology is still a big challenge. And getting to used to that is also a big challenge. So physical is required, but having said that, if you look at the number of branches over the last 15 years or so, which an NBFI has opened in their, especially in the housing finance segment, that has come down drastically. In fact, in some cases, in like at least in Vastu, we actually operate with less than 45% of branches actually would be required to run a traditional housing finance company. So that's all because of technology. Customers are adapt to technology. In fact, the newer generation are helping the householder to actually interact with us on technology basis. We can see a lot of queries, a lot of issues getting resolved digitally itself and without the customer coming to the branch. But as I said, it is a requirement. I guess it is still away from a distant dream that where we'll see a completely branchless operation.
Even if it doesn't get branchless, I think there are a plethora of channels customers can interact with. And Sharati, in fact, you must have experience with your experience of more than a decade in banking. You must have seen that right from mobile apps to Facebook messengers, Twitter, WhatsApp. There are so many channels which have been explored by BFSI companies. So in a way, even service has become omni-channel. So what's your take on providing this seamless, unified service experience across delivery formats?
So what we found is that yes, the channels have proliferated, but what does omni-channel mean, beyond the jargon? It basically means personalized, contextual service or products which are powered by technology. Now, Facebook Messenger, whether a customer reaches out to a bank on a dispute through that channel or through a traditional branch format, we see commonality across delivery formats. Number one, inform customers about any situation that requires their attention, even when they have thought of it themselves. Second is Can I help improve my customers' financial wealth by monitoring it and by providing recommendations? Omni-channel definitely needs to offer event-based service product resolution. So if I have had a dispute, that is not the right time to cross-sell. The first thing is resolution, complete correct within tact, and then we come and say that we noticed you were doing a lot of digital transactions and this dispute was one of them. Would you now like to take a cyber insurance, for example, to ensure that the next time you're doing a digital transaction, this doesn't, you are using it with a lot more peace of mind. Finally, all of this has to be contextual, like I said in the past. And in the near future, if I want to gaze forward and say that, of all the channels that we've had and we are looking at consistency, I think we all need to gear towards customers conducting financial operations using voice processing, gestures. And that is something that still hasn't come in, but I see that coming in clearly in the near future. So that is what it means, I feel, across delivery formats, omni. And if we are able to deliver consistently across these, I think we are home, because the customer's needs are not changing too much. It's just that he or she is reaching out to me through these various formats.
That's interesting. The needs still remain same, but how they want that service to be delivered actually changes a lot. And Prithvijeet, in fact, mentioned about digital companies and digitized companies. So traditional companies possibly see digital channels as an addition. And digitize, but the more digitally native or digitally born companies see this as a very natural course of proceedings. Mohit, have you also seen, in fact, you have been in direct sales for quite some time in your career, and direct sales is a direct substitute to the traditional channel where you used to have a huge number of resources on the field providing that sales experience. Are we really, when I say we, BFSI, do you think it's really able to compete with e-commerce in that sense? Are we matching that experience?
You meant e-commerce offerings
sales.
of BFSI,
Online sales,
online sales.
of
Okay.
yes, insurance, or mutual fund, etc.
Yeah. So I think there are fabulous examples, that we have around us. Insurance is a classical example, right? So I have been part of an insurance company, general insurance company, early on, and at that point in time, we were giving travel insurance in less than 60 seconds, right? We were offering a motor insurance policy in 5 minutes, and this is like almost a decade ago. So general insurance as a category has evolved, and that is where I would say that it is actually the best in the entire BFSI space when it comes to digital sales, right? And it's about, and the company has and companies have innovated. So there was this example of devices and sensors which are sensing how the guy is using his car, bike, home. Are there any risks, etc.? So all of those have been baked into delivery of services. So that's a classic example. Similarly, within insurance, this category of term insurance, which was aimed at, LIC has been in the country for decades, right? It's an amalgamation of several insurance companies, but savings plans was something which they were selling. But term insurance was is actually the base level product that everyone should have, and no one understood it. It's that movement of digital adoption, and some of the players, both on the manufacturing side and the distribution side, joined hands, and they have actually made term insurance.
Sorry to interrupt you, Mohit, but I think there is some distortion coming from your audio. I'm not sure if the others are experiencing it as well.
Yeah, I'm also experiencing it, Frazier. I could not hear it.
Yeah, couldn't really hear him.
We still can't actually, Mohit. Sorry. You might just want to just
Switch off the video maybe or try it.
it could be a bandwidth issue.
Yeah.
No, we still can't hear you.
Yeah. Mohit, would you like to reconnect?
Yeah, let me join back. You may continue the discussion. I'll join back.
No, this is coming perfectly now.
Okay, now, yeah, it's come back now. It's come back now.
Yeah.
Okay. So
Thank you.
so I so
You
should
can
we
just
start from
if you
again,
can
or-
just rewind about a minute into what you started saying.
Okay, great. Thanks, Frazier. Thanks for pointing this out. Yeah, so I think a lot of examples. I spoke about insurance, GI specifically, then spoke about term insurance, then I spoke about credit cards, right? Credit card is a phenomena where banks are pretty stingy issuing a card, right? And there are credit card solutions that are available, credit card like solutions that are available, which are innovations from fintech, making a credit card like product available, like a credit line in your mobile phone in less than 60 seconds, right? So there are a lot of examples. We are also trying to solve at Checkbook similar things. We have actually cracked the digital lending model for this small business community, where earlier it used to take 7 to 10 days for a business loan to get issued, a lot of paperwork. We have just digitized the process end to end. And we've made a proprietary algo which actually takes into account a lot of data, and it connects back with NBFCs and the banks, and we are able to approve a business loan in flat 2 days, at best 3 days, right? So yes, there is a lot of work happening, and that's the only way you will be able to improve penetration, move the unbanked into the banked net, improve penetration across financial services.
So yes, then in that case, you are matching customers' expectations, and perhaps we are constantly improving as service providers, constantly improving on how the service is delivered. But
I think one more point, sorry, Vipul, I'll just add, because this e-commerce thing is a little exciting. So if you look at how things have changed, right, and they are evolving, and we've also done something similar. People who are using a current account on my Checkbook mobile app, right, or he's using a bookkeeping service on my app, or he's tracking his loan or credit line on my app, I'm actually allowing him to pay his bills. That is also e-commerce. I'm allowing him to pay his mobile bills, electricity bills, insurance premiums across the spectrum, also recharge FASTag. And I'm not asking him to do this one at a time. I'm actually able to club all of this into one transaction and say pay at one go, right? And I will alert you. And we are using language to our advantage. We offer these services, including banking in the language. So it's very convenient for him to adopt the e-com orientation that we are bringing in terms of financial services, right? So that's there. It's also about bundling rewards. We've seen, Airtel today says, okay, don't renew your Netflix by paying on Netflix site, but you can actually add Netflix subscription to your mobile bill. We have equivalent of that product where we are saying the customer has been onboarded on a subscription. He pays us an X amount. He gets access to best rates on lending. He gets access to a great current account, and he also gets rewards. And he's able to use those rewards to access plethora of OTT and other services, right? So it's all coming together as an e-commerce proposition, which you would otherwise go on e-commerce portals and individually buy.
And that's interesting, bundling with other products, which is also popularly called as embedded finance as well. Probably it's a fairly new concept as a term, but does it mean that customer delight is when the experience becomes unexpected? Deepu, have you tinkered with embedded finance, like marketing your products on other platforms?
Yeah, I think that's an integral part of insurance. People, and embedded insurance is something which everybody is familiar with. And if you look at insurance itself, it's basically a derived product, right? It's when you buy a car that you buy car insurance, right? So it does go as a bundled offering, across many OEMs. And similarly, we look at the e-commerce platform. We've been able to issue various products, along with the primary product. So it's very much part of the overall landscape. I think the key here is to basically ensure a seamless experience, because when the customer is buying, it should appear as if he's buying one product, right? By and large, it shouldn't appear as if he's buying multiple products. I think that is one. The second thing is we discussed earlier. I think many of my co-panelists made the point that a one-size-fits-all approach will not work, because even for example, when you sell, let's say, millions of mobiles in a matter of seconds on an e-commerce platform, you're not selling one model, right? You're selling multiple models. So therefore, the whole way in which the product gets sold, right? Whether it's plug and play option or whether it's a choice in terms of choosing your features. Of course, subject to regulations, because we are a regulated industry. I think these are two key aspects, and I think it's clearly helped us take embedded insurance up. Especially in the last couple of years when the whole sale process, in many ways, has been digital.
So what's next? Health insurance on metaverse?
Interesting. I think metaverse is clearly here to stay. In terms of giving immersive experiences, and especially in the insurance arena, it can have multiple ramifications. You think about somebody, for example, buying property insurance, right? You're not able to. Let's say the firm is not able to make a physical visit, right? But through but by leveraging the metaverse, and by having immersive experiences, right? You can actually go inside the insides of the entire property, evaluate it, and then give your your suggestions and commercials. So I think it's here to stay, especially in various areas, such as claims, or where the fulfillment has got to be physical. But let's say execution in the physical world is difficult, right? Then clearly it helps across the entire spectrum, not just in sales, but even in claims and servicing to the entire life cycle.
Certainly, metaverse is probably the next frontier for companies, but it also raises a lot of questions as far as say data privacy or regulation even, because BFSI is a very important, very sensitive segment as far as consumer interest is concerned. So do you think our regulations are really in line or really geared up for this critical component of CX? Sharati, Satish, if you guys want to take this up.
So, I can speak for RBI. Just yesterday, I mean, maybe some of us have noticed, RBI sent out this UPI 123 Pay, right? So if you look at this whole CX, digital revolution, payments revolution that has happened in India, it's bypassed the Bharat feature phone user. And yesterday on CX, RBI has unleashed this whole, I think there are 4, it's an app-based functionality. So feature phone users can actually download an app. Yeah. They can do a missed call and then they get a call back and they can put in their UPI pin, transfer money, make a payment, pay a bill. Then there's an IVR facility where the same feature phone can outcall and do it. Plus there is a proximity sound-based payment, which I'll have to find out more. But that also sounded basically that contactless offline proximity data. And then they will read and be able to do it. So I think in that terms, there is CX and there is more inclusion that the regulator is definitely bringing about. The regulator is also interested in resolution, right? And another new initiative I recently read about is something called a Digi Sathi that RBI has launched, which basically has a toll-free number 24/7. It has a short code and it has a website, plus it has that binary chat bots also. So I think what is the job of a regulator? It's pushing boundaries, setting boundaries and then pushing them, right? In that sense, I clearly see our regulator stepping up and doing the needful.
And I think this is a right step, like you mentioned about financial inclusion. CX should not be elitist. It's a right of everyone, every person in the spectrum, and that's probably what the regulator needs to do. And we are on the right path. Satish, anything you feel is great, which is coming up from the regulator's side?
No, sure. So I guess Sharathi is, addressing a concern probably related to the banks, but the RBI especially has been looking into NBFIs as well. There are 4,000 plus active NBFIs out of the 12,800 odd registered in the country, which are furthering the cause of, financial inclusion. And here, if you see, the biggest concern has been in terms of, reverting to customer queries and grievances. And one of the things RBI has set out already is to move certain segments of NBFIs based on their sizes. They have come with a scale-based regulation earlier last year. Based on that, they have further saying that they need to implement core banking solutions at their branches. So this will enhance a lot of experience in terms of customer issues which currently they are facing. They've given a phased way in terms of doing that, but the implementation will start as early as March 23. That is one. Second, when it comes to, say, housing finance companies, our regulator NHB has already been on the forefront of addressing the customer grievances. So they have already implemented a portal called Grids, where the customer actually can go online and fill those complaints. In fact, they're taking it a next level altogether, what I understand, in terms of getting directly in touch with NHB and the concerned PLI and addressing those concerns. So yes, regulatory framework is there. It is all attuned to give a better experience for the customer when it comes to its own financial decisions, because this is an industry which has implications when it comes to and person's future, or for that matter savings as well. And it's taken very seriously by the regulators. I am part of many such discussions, so I can clearly relate to that. How things are being viewed by the regulators and also by the policymakers as well. So, in fact, last year, one interesting thing happened is that in the parliament, there was a question which was raised on, the level of, or the addressing of the concerns of, home buyers in the country. And this was a statement which has to be given. So yes, policymakers are also upfront and, looking at it. So it's a great welcome change, and hopefully at the end of the day, what we all work towards is giving a better customer delight.
So do you think it will also make service providers, not just the larger ones, but even the smaller ones, to pull up their socks and get the house in order, because consumers are increasingly through technology having a direct connect with the regulator. So they better look into it before anybody else, the regulator, pulls them up.
Yeah, that's completely right. In fact, many of the regulatory, I would say, benefits, whether it be related to getting cheaper finance or to get internal ratings updated, customer complaints or grievance handling is one of the major concerns. So it is in the forefront, and we have seen PLIs getting penalized because of non-adherence to customer complaints. In fact, the regulator, at least in the housing finance, NHB is doing a wonderful job. They track these grievances, update every month on month. So they ask for MISs from all sort of sizes of HFCs. So it is something which is really maintained, and which gives a higher possibility of giving a closure to the customers' concerns. So yes, it is part of that entire appraisal program.
Great. Okay. So I have an eye on the time as well, on the clock as well. So in fact, we have had an in-depth discussion on what customers expect when it comes to customer experience. We've spoken about the commoditization of financial services and home delivery of BFSI services. But I think there's a common theme that it's important to measure and, more importantly, to derive insights from it. It's important to provide more contextual solutions, have a consistency of service. If you have consistency and we have contextuality at the same time, then of course the service wouldn't be a commodity. The CX clearly has benefits to the bottom line. No one can deny that there are success factors of measurement and leveraging technology. But brands may soon get on to the metaverse bandwagon as well. And of course, the regulator has also an eye on what customer service is, which is an extremely component of customer expectation. And there are few questions which have come from the audience related to customer service as well. If I can pick up a couple of those, is one is about one is for Sharati. There is Snehashish Bhattacharya who has a question for Sharati. He says that understanding customer expectations is key to servicing customers. In today's digital space, Gen Y is looking for wow experiences. So how fintechs can help in understanding customer expectations? But I think since it's posed to you, and banks, of course, are fintechs in their own right. So how can you understand customer experience for the Gen Y?
So, the best way to do it will be to look at what you already have as feedback mechanisms. You have CSAT, you have NPS, you take in the methodologies, and you take in customers who are super happy with you, super unhappy with you, take in insights from both of them. Basis those insights, you then go about building the improvements that you want. Gen Y, Gen X, there is a requirement of the pillars of what is it based on. What are they looking at? Basic services need to be consistent, and then delight needs to step up. If your basic level of service is inconsistent, incomplete, incorrect, then having a delighter will not help you. Let me give you an example. There is this broadband service which basically said that you go and you fix the customer's problem of broadband, and then you set up popcorn to the customer's house, pop the popcorn in the microwave and give it to the customer. The problem was that most of their executives did not have knowledge, weren't reaching on time. So by the time they were reaching and resolving the issue, the popcorn or the delighter was not making the sense. So I think brands need to have a sense of where they are on the service steps. Ensuring the hygiene is met is very critical before you jump into delights.
And a similar question, thanks Sharati, and a similar question in fact for Deepu as well. Mukesh Mishra from SBI Card is asking how fintechs can help in measuring customer satisfaction. So I think he would also mean particularly in your experience with the fintechs. In fact, if you can throw some light on financial inclusion as well, since it's something which has been close to your heart. Deepu?
So you were asking me, right, Vipul?
Yes, Deepu, yes.
Yeah, and I think your query was around, because in between I could not hear you fully clearly, but you're talking about how do we leverage, fintechs to measure and enhance customer satisfaction.
Customer satisfaction, yeah.
Yeah. See, there are, two things which we need to keep in mind, broadly, there are multiple ways of classifying fintechs, but fintechs can be broadly classified, or insurtechs, into two categories. One is, the people who come out with, a full business model or maybe a partial business model and challenge the established players. The other is, fintechs who do not come out with, let's say, a business model, but they basically attack one part of the value chain. So, for example, they may have the best claims experience, they may have, the best, experience in terms of, let's say UI, UX. Mm-hmm. And then they work in a symbiotic manner, with established players to ramp up customer satisfaction. And let me explain this with an example. You take insurance and you take motor insurance, which is the largest form of insurance. What normally happens in case you have to crash your car? You would, call up the insurance company, they would depute a surveyor who would come to the site of the crash, assess the extent of damage, submit a report, and then, the whole rigmarole would come in. So, for example, we tied up, with a player in this space, where now what happens is, you don't need to have a physical surveyor. The customer it's just two steps for the customer. Click photographs of the damaged car and upload them using the mobile app. And in 20 minutes up to certain amounts, we settle the claim. So what takes days, now takes, 20 minutes. So that's how, we've been able to revolutionize, customer experience. And similarly, when it comes to measurement of customer experience, like we mentioned, let's say NPS at every touch point, or whether it is, through voice or video, there are plenty of players today, who are available, with off-the-shelf solutions. So whether it's measurement or whether it's ramping up, I think, there is scope for partnership.
Great. The more helping hands we have, the better it is, certainly.
Right.
Thanks. There is a question which is open to everyone. In fact, Shabir Basha from Chola Murugappa Group is asking, and very interesting question, especially with respect to BFSI. Is it necessary to have contact centers, or can it be managed via bots?
So you want me to take that, Vipul? I can answer it quickly.
Yeah, please.
Yeah. So I think Shabir, especially when the pandemic happened, right? Suddenly there was a lockdown and contact centers had to be shut down, right? At that time, bots came to the fore. I think what's very important when you look at bots is you cannot sometimes expect to move from overnight human servicing to 100% digital servicing. So I think one area where we were able to bridge the gap is in case the bot is not able to answer, then the bot transfers it seamlessly to a human being to take it through to completion, and then we keep teaching the bot. So the bot is learning all the time. But while you move on this journey from call centers to bots, you also have assisted digital. You have digital handshake. I think if you can do that, and when we started at the peak of the pandemic, 80% of our servicing was through digital means, including bots. So I think it's tried and tested today.
Thanks. Mohit, any thoughts on this? Considering your experience with
I think a very interesting question. So I think bots will definitely not replace, at least in India, contact centers. I'm pretty clear. What they can definitely do is make your contact center bill reduce for sure. So instead of 10 people, 2 people, 3 people can, like Deepu said. So I think the classical case of a bot interaction is Amazon, where they preempt the top 10, top 100 queries and they throw solutions to you beforehand. So they're reading your mind while you are trying to file a complaint. And only when the issue is so custom, is so specific to that particular individual is where there is a handover which happens to either a chat window or a telecall is initiated. I think that will continue. Then the nuance of language, because in how many languages and to what accuracy will you be able to train your bots, which is again an evolving piece. People still like to speak to people, and that's something which I believe is very important. And it's a big concern in a bank, so to say. It's very difficult to get a bank customer service person to pick up the phone. So I think it will never, and it is never, and it is very difficult for them to pick up the phone because the call volume is so high, right? Because people want to speak. So to each his own, again, segment of one, there are all types of customers that you will deal with. There are certain people who would like to just, get self-served. A bot will come handy, obviously reduces load on your contact center, improves your TAT. You can quickly send an NPS moment of truth survey. The guy is going to give you great rating. He'll be a promoter. But there are a lot of people who would like personalized interaction, either on a chat window or specifically on voice, right? So that's the piece. So contact centers are here to stay. And they will be contact centers which will have multiple channels. I remember Charati saying that it is not about one type of channel versus the other type of channel. It is about multiple channels through which you are trying to solve for the customer.
Vipul, if I may add to what Deepu and Amit said on this, because this is also something we are introspecting a lot on. And so look at a contact center. What is the primary point of cost is the handling time of the call. Mm-hmm. Now, when a customer is calling you, let the bot answer information status update. But there are moments of misery where a customer needs the reassurance of a voice. That I spoke to somebody and I remember Deepu talking about emotional quotient. And the voice and a human interface is very, very critical for that emotional quotient part of it. The intellectual pushing information, status update, delivery updates can happen there. And that is why voice will be there to stay, but voice can be reduced. How much of emotional support, I empathize, I tell the customer it will happen, that reassurance part we can definitely bring down.
Sure. So it's a matter of, I think, achieving efficiencies in scale, reducing cost as well. So
efficiency as well as effectiveness.
And then the answer is not binary. It's not 1 or 0, either contact center or bots. It should be a judicious mix depending on your audience. Certainly. I have one last question, which is for Prithvijeet. Prithvijeet, the question is that how does competition impact customer expectation, CX?
So today, customers' expectations are just not are formed just not on the basis of your competitors. Today, a customer experience is something in a completely different industry, and then kind of expects that from your industry. I mean, we have discussed the kind of learnings and the kind of best practices that BFSI has taken from e-commerce, for example. So it is no longer limited to what your own competitors are doing, but globally what others are doing, and we kind of adapt to that. Uh, uh, End of the day, customers' needs, as somebody mentioned earlier, are still the same. But uh, the mediums through which he can now fulfill those needs, they have increased. Uh, uh, Time has kind of crunched itself. What used to take days earlier, now the expectation is it should be done on the same day, and in some cases within an hour. So we are adopting to those changes. Uh, uh, but if you see, to keep things simple, you require a very complex backend. So be it on your digital assets, be it on your processes, we have to keep things simple and not complicate things. All the complications must happen at the back end. The customer should not feel it or see it. That's what I think customers are now expecting. They want things done accurately, quickly, without any error, and without any follow-ups. So if we can just look at these three or four aspects and not complicate things for the customer, then we have arrived.
I think that's a great point, that simplicity is probably the key. Too much confusion, and like all our marketing collaterals used to say, hassle-free process. Hassle-free process doesn't happen because you say it. It happens because you keep things actually simple. That was a lot of questions. Thank you, audience, for your questions. I think the discussion has lived up to its promise, and the CMOs, CCXOs, and digital marketeers in our audience would have got a lot more clarity on where to take their organization in the coming 5 years. Thank you, Sharati, Deepu, Prithvijeet, Satish, and Mohit, for sharing your nuggets of wisdom with us. And over to you, Frazier.
Thank you so much, Mr. Vipul Oberoi, for summarizing that entire panel discussion and duly helping in answering the relevant questions raised by our attendees. Truly valuable takeaways there from that session. With this, we bring today's virtual event to a close. Today's session wouldn't have been a success without the active participation of all our esteemed panelists and delegates. I would like to thank each one of you for taking your time out and being a part of this virtual event today. It was great to be in your company this afternoon, ladies and gentlemen. Thank you once again. Stay safe and take care.
Thank you.
Thank you.
Thank you. Thank you, Prithvijeet.
Thank you, everyone. Thanks.
Thank you, Deep. Thank you, Deepu.
Thank you, Vipul.
Thank you.